Okay, welcome everyone to today's webinar. My name's Alex. I can see there's lots of people coming in straight away. Thank you for being on time, but we might just wait 1 minute before we officially start. But you can see the attendee numbers going up really quickly, which is great to see. So we'll start in about 1 minute. Thank you. Okay, so we've got quite a group already, so we might just get stuck into it, Georgia. So
Right.
welcome everyone. My name's Alex Gibbs. I'm the Co-Deputy Chair of the National Board for Wine Communicators of Australia, and I'm also the CEO of Smile Marketing. So thank you so much for joining today's webinar, which is on direct-to-consumer in 2026. I'm coming from the traditional land of the Gadigal people in the Eora Nation in Sydney, and we are pleased to acknowledge the traditional custodians of various lands on which you all work today. The content today will take about 45 minutes. Then there'll be time for questions at the end. Now, in terms of asking questions, there's a Q&A feature, which is down the bottom. If you put your cursor down the bottom, then all of a sudden that feature will come up. So please ask any questions so that we can keep a track of it during the webinar. Also, if we don't have time for some questions, it means that we can actually answer those questions later on. Then on top of it, if you've got any technical issues, please just put them through the chat. I just saw that I'm echoing at the moment. Okay, I've just changed something, and hopefully that works for you. All right, and then as usual, the webinar will be recorded, and this recording will be sent to you after the webinar. So to start off with today, we're going to look at key macro D2C trends, referencing both Australia and the US data, and highlighting growth opportunities that exist for wineries at all stages of the direct-to-consumer journey. We've invited Georgia Rasmussen, who was the first speaker at our last D2C Summit in Sydney. Now, Georgia Rasmussen is a D2C marketing specialist recognised for helping wine brands accelerate growth through smarter digital engagement. As the founder of Georgia Rasmussen Consulting, she partners with wine producers to optimize customer journeys, strengthen loyalty, and unlock revenue. She excels in translating complex consumer insights into clear, actionable D2C strategies. Now, I'd like to welcome Georgia and now hand over to her. And remember, asking any questions, please click on the Q&A feature at the bottom of the screen. Welcome, Georgia. Over to you.
Great. Thank you, Alex. Thanks for the introduction. And hi, everyone. It's good to be back doing another WCA webinar. I think my last one was in 2024. So good to be back. In thinking about what I would chat to you about today, I just, I've sort of pulsed going sort of from broad to specific topics. And today I felt that what might be relevant is just to do a small recap on a couple of fundamentals and then to move into my favorite topic, which is sort of benchmark data. And just to really encourage you to sort of focus on those growth levers and using that benchmark data, and then obviously having a bit of a conversation around some key trends that we're seeing in the US and Australia. So there's a little bit of content to get through. Hopefully the timing is about right. This is my background. I've looked at the list of attendees today, and a lot of you I've spoken to, so you kind of know my background, so we'll shoot past that. So just recapping today's discussion. So I will do a little bit on my roadmap, which a number of you will have seen, but I think it's good when you take this 45 minutes out of your day-to-day just to think about the whole channel and the processes and, I guess the pieces of the puzzle that need to be put together to make it all work, because it is quite complex. So I'm going to do a quick recap on that. And then I'm big on you thinking about the size of your winery and what impact direct to consumer can have as a percentage of total, because obviously there's a margin play here. And in circumstances where traditional trade is tricky and challenging, if we can push more into this channel, there is a bottom line impact pretty quickly. So I want to just recap on that and then get you thinking about which part of the cycle your winery is at. Are you just starting? Are you in the middle? Or are you mature? And therefore what you should be focusing on. I'll then move into some of these, the trends, the data, the benchmark data, and then have a bit of a discussion about some of the strategies and tactics that you may be able to employ. And I guess that, you know, if I was sitting in your seat, I would be listening to this content going, yep, got that covered, or maybe a tick and a cross kind of process. Because at least at the end of the chat, you may come up with sort of 3 or 4 things that you can focus on or take back to the business at the end of today's conversation. Okay, here's the roadmap. A number of you will have seen this before. I'm actually just going to move my chat box so I can see it. But I've sort of broken it down into 8 parts. So this idea of channel potential, for those that have spoken to me before, you know that I'm big on modeling the size of your opportunity, because only then can you sort of future fit the resourcing and I guess your Marcom's plan to support the size of that potential. It's also just useful to know in terms of you know, I guess investment in the channel. So modeling that piece is quite simple. There's a couple of pieces that go into it, but I always encourage that. Then obviously working out your strategy, getting your resourcing in place, working out your tech stack. And I will just make a broad comment on the tech stacks. I think there's some really good competition in the market, and they are pushing each other ahead. I think it's really exciting. And the other part that is, for me, super exciting, being a numbers person, is that they are all getting into the data analytics and providing you with that rich information. Every one of them, whether it's Commerce 7 or Vin Creative or With Wine or Wine Hub, they all have access to these big data pools, and they're working out ways to provide that benchmark data. So make sure you're talking to your providers about how you can use that to develop your own dashboards. So technology is key. And then the bottom 4, customer journey, customer experience, fulfillment, and then, of course, relentless execution and analytics. And I think it's worth just revisiting this roadmap every so often. And, you know, I've circled my 2 big passions, which are modeling the size of the opportunity and certainly the analytics and the execution, because that's really what drives, I guess, sales, revenue, profit. But all of them are equally important. So perhaps have a look at that roadmap and work out, you know, where you think your strengths and areas for improvement are. I then wanted to talk about the size of your winery, just very briefly, but I can see who's online. You're all different at different, you know, case volumes, but this is a really rough benchmark in terms of size of winery and potential for volume to be going direct. And I think it's just good for you to have this in your mind, and also to be looking at your overall channel splits within the business. Regardless of whether you're sort of GM or D2C specialist, you need to know how much of your volume is going in each channel. But using this as a bit of a guiding principle in terms of modeling the size of your opportunity. So I don't need to say any more there. You'll get this on the recording, but you do need to understand these numbers and use them in the modeling of your business. Obviously, these percentages, I've just got a little NB at the bottom, will vary based on the point of time that you're at. So obviously, if you've just launched, you're going to be slower, but these are optimal numbers. So if you're in the mature stage of your business, this is where you should be able to get to. So keep that in mind. And if you don't know the answer to this, then perhaps that's something that you can go and dig out with the broader business. And then the last little recap slide is around just areas of focus for your business, depending on the stage, the life cycle stage that you're at. So this is all sort of broad brush strokes, but if you're at the launch stage, and I'm still talking to some wineries who are just getting into the space because they're either a newer winery or it hasn't been an area of focus, then, you know, this idea of modeling the size of your opportunity, getting your tasting room sorted out in terms of data collection and conversion, and launching your wine club should be the first things that you do. And then moving into the growth and mature stages, obviously you would then move into fleshing out your full communication strategy into email, telemarketing, web, social. And if you're mature, this need for analytics and deep customer data is an imperative for growth. So I guess this slide, again, revisit it on the recording, but it just gives you a little bit of hopefully a guideline on where you should be focusing depending on where you're at in the cycle. So they were my 3 recap slides. I then want to move into some trends that the market is seeing more broadly. Again, I need to just get rid of that little box off my slide. Minimize myself. There we go. So one thing I've noticed, look, I guess in the last 6 to 12 months, the US is in a really different place to Australia. It's a mature market. It's a very mature market. They've got some different economics going on, some different pricing structures. And I just think the dynamics there are a little bit different. It is the Disneyland of the wine world. Their price points are much higher, and the wineries and their cost of tastings has really almost got ahead of itself. And I think that combined with the economy is seeing some of this compression in the direct-to-consumer space alongside, broader economic and consumer behaviour patterns. So I say this, I think it's interesting to look at the US trends, but I'm not thinking at the moment that these are going to be reflected directly back into the Australian market as I have thought in the past, i.e., thinking that we were just a little bit behind them. So obviously the US is seeing a contraction in their D2C space, although just in the last few months, they're seeing some stabilization. Last year was not a good year for them. The largest hit were the large wineries, which interestingly have a broad spread of price points. And my theory on that is that direct to consumer is really a game about premium wine. It's not really a game, certainly from the single brand winery model. It's really a game about premium wine, sort of 30 plus price points, maybe 25 in Australia plus price points. It's not for everyday price points. So I think that's where a lot of these brands, the larger brands, got hit in the US. And then which leads into the next point, that premiumization is, with the overall market being down, the high end is still holding up better than the lower market. And I think that just feeds into the mechanics of direct to consumer and the type of engaged customer that we have. The other big trend over there is the digital and AI adoption, and that direct to consumer is really moving into this conversational area with AI tools. And I think we're not really there yet in the Australian market, but there's fierce debate about how quick that changeover is going to be. But we're sort of talking here about chatbots, virtual assistants to help people with personalised marketing and club upgrades and that sort of thing. What it does do is obviously reduce the friction in the buying process online, which is a good thing. But certainly there's movement in the market in the US in that space. So then coming back into the US and Australian markets, there is this ongoing conversation around shifting demographic focus. And just to throw out the numbers again, boomers and Gen X are still driving the lion's share of volume, which is a good thing. But wineries are increasingly targeting millennial women, which is the larger growth segment, who show different and more engagement-driven purchasing patterns. So this is one of the shifts around experience versus, the current experience for millennials versus, the older Gen X boomer experience, which complicates your lives a little bit. There is also a focus on loyalty and experience. A lot of this is around retention, but there's, a lot of the wineries in the US who are trying to combat declining visitation, and I know that's the case in the Australian market as well in some areas, but they are looking to focus on these exclusive, high-touch, highly personalised experiences, to boost retention and increase lifetime value, which, is a good thing. It's just a different it's a different area of focus depending on where you're at. And it's probably more for the mature winery at the mature end of the life cycle. And then the third point I've got here is around sustainability and style as a broad macro trend. Consumer preferences are shifting towards organic, low intervention and lower alcohol wines that tell a clear story, which really comes back to a product trend, I guess. So, thinking about how that's going to impact you going forward. So I then want to talk about just some benchmark stats. Now, the reference data I'm using this time is Commerce 7. You would have heard me speak, for those of you who were at the DTC conference at the end of last year or read the Wine Australia report, I've referenced Wine Direct data. But as I said, all of these platforms have access to great data sets. So with Wine, Vin Creative is doing a lot with data as well. And going back to with Wine, they're using Power BI, which is a great data tool. Wineries can have access to that, but all of the platforms are really embracing the data. I'm using this Commerce 7 snapshot today, and I would encourage you, the other one that's worth mentioning again is Analytics. So they publish sort of monthly updates as well. So jump on board to whichever platform you're using, talk to them about their benchmark data and use that to build your own dashboard of data, because then you can compare what's going on in your winery versus the industry average. It's a very useful comparison. So today I'm using Commerce 7's latest snapshot, and all this is a combination of Australian data and US data, and wineries represented here have been on the platform for a minimum of 2 years. So it doesn't include anyone that's been transitioning over in the last 12 months. I think I've got maybe just 5 or 6 slides to show you today, but I'm interested in these overall growth rates. Now, this looks alarming, but don't let it be. What I'm interested more is in the comparison and this rolling comparison. So remembering that this is just February data. It's a snapshot of the month. So Australia is down versus February last year, which is interesting, but there could be a number of factors in play there. Timing of shipments. If a shipment goes out, you're often, not emailing. I don't know. Anyway, the point of comparison that I wanted to make was if we looked at the January snapshot, Australia was up. So January 25 was 0.81% growth, but 26 was 1.82% growth. So sometimes there's a swing and a roundabout between months. And I think it's easier to look at a rolling 12-month average than to take just these monthly numbers, but they are still an interesting point in time as to what's happening. But you can see that there's no wild growth happening in February 26 anywhere. So things are pretty soft. I always like to consider the average order value by channel because it helps to drive your communication strategy and where you should be focusing. And none of this has really changed. I mean, the benchmarks have been well established, but I think it's worth noting just that the average order value for club is highest, followed closely by inbound, which is your email. Web is organic traffic coming to the website, and POS is still where it is. It's usually the lowest because it's a lower bundle, lower pack, 2 or 3 bottles, versus sort of the 6 to 12 packs that are generally going through club and email. But I note that pattern is the same across different countries. I love the way this data is all fairly similar, give or take price point nuances. But what I would recommend is that you are looking at your average order values by channel in your business and comparing it back against some benchmark data, depending on which platform you're using. So average order values by channel. Then we've got sales by age range. And again, this data has not moved significantly. I am seeing a slight increase in the 30 to 40 age group, so the millennials, which is not unexpected. And, I looked at so much content last year about alarm bells around what the younger cohorts are doing. And I would just encourage everyone to ask themselves if they were, for those that are my age, I know a lot of you are younger, but, were you joining a wine club in your 20s or 30s? Probably not, because your disposable income is not there. So when you think about direct to consumer and you think about our heartland, it is people in this sort of, I think, late 30s into 40s, 50s, where you're more established and you perhaps have more disposable income. So none of this is a surprise to me, and I don't think we should be, overly alarmed. And I think that this 30 to 40, 40 to 50 age group is coming up, which I would expect. And I go way back. I've been in this game a number of decades. And, the average age, if I go back to Cellar Masters in the 90s, it was not people in their 20s who were joining wine clubs and purchasing that way. So I just make that as an overarching comment. But these numbers are, as expected, but it would be interesting. I am actually working with one client at the moment who's really skewing to 60, 70, 70. So their age brackets are older. So there are nuances within wineries. But again, I would encourage you to use this benchmark data and compare it to what's going on for you. This slide shows club signups by age, which just reflects what I have been talking about. And I don't think this is really going to change. I don't think we should be expecting the under 30 group to be growing. I would expect this curve to stay roughly the same. But again, look at your own curve and, just monitor what's going on. Club cancellations are following the same curve as club signups. If I flick between the two, you can see that there's no surprises there in terms of the age spread. In fact, there's less in the under 30s in terms of sign-ups. So that's interesting. If I just flick between, there's a little bit more cancellation in the 60 to 70, but, maybe the end of their lifetime with a wine club. So I always find digging into that data interesting, but do look at that as a benchmark piece for your winery. This slide shows sign-ups versus cancels. This is a little more alarming. Because you can see that there are across the board and across all countries a higher level of cancellation than there is a sign up. And again, this is a snapshot, remembering that this is February data, and really we should be looking at compound attrition over the 12-month period. But I hope all of you are in your dashboards and in your monthly reports looking at conversion to list, conversion to club, and attrition, and all of these key metrics, and then just measuring versus your budget, and then measuring versus last year, and then perhaps even measuring as a rolling 12-month average. That is the only way you can pick up the individual trend for your winery, but it is still very useful to use the benchmark data from these platforms as a yardstick, essentially. But we probably have, look, all of these countries are sort of mature in the wine club model. So in a way, it doesn't surprise me, but we definitely need to keep a close eye on it. The other thing I'm interested in Australia is that a lot of people ship in February. And if that's the case, you will get a spike in cancellations. So it's hard to take a really solid read from this data. This slide shows why people are cancelling. And I think this one's a little bit disappointing, but probably not surprising, just given the number that's sitting in that other category. My experience has shown me that cancellations are generally always financial reasons or too much wine. And I note that there's not a too much wine bucket here, but I'm presuming that's sitting in the other category. The other one that's of interest, well, let me just go back to that for a minute. People often don't want to say that they're cancelling for financial reasons, so they'll tell you they have too much wine. So it's a little bit hard to read from this data. But what I am interested on this slide is the switching to another wine club. I think that's really, really interesting. And I equate it to, I've done a little bit of work with the Belvoir Theatre here in Sydney, and they compete with the STC and, there's really, and the Opera House, but it's the same customers moving between the subscriptions for each of those, for each of those businesses. And I'm interested in this because, I've mentioned to a number of regional bodies this idea of having some sort of co-op branded opportunity, and I'm still interested in that if anyone wants to talk to me about it. But consumers are promiscuous. They don't stay with one brand forever. Now, there are some outliers in that. Rockford's maybe, you know, these really hard to access businesses. But on the whole, we know that people stay with a single brand winery for 3 to 4 years and then they move on. But I think this idea that they're switching to another wine club says that they're still a buyer, but they just want to move to something else. So how can we manage that? Either within tiered brands or with co-op offers? I don't know, but I think there's something in there. At the end of the day, you need an appetite for data. And I know you've heard me say this time and time again, but really you're optimizing a data set as much as you are engaging customers at the cellar door and selling wine. And I still, you know, I talk to other consultants out there, and I still think this idea of the data set is under-leveraged. And I know that wineries that are really getting their hands dirty in that space are unearthing some nuggets. So if there's one thing I encourage you to do, it is definitely have your house in order around size of opportunity and managing your P&L, you know, very specifically for the D2C channel. But underneath that, looking at your data sets and slicing and dicing the data for opportunities. So I'm just looking at my points here. Do I need to go through those? Probably not. I've just said that, but numbers are key. If you want to talk about your numbers and get that in order, let me know. You can actually read this. You can have a look at this when you look at the recording if you like, but just these are my 4 top budgeting and reporting tools. Certainly modeling the size of your opportunity. I think I've said that 4 times already in 15 minutes. Predictive sales budgets. So looking at forecasting, there's a very predictive channel, forecasting your sales by budget, by channel, by month is the key in terms of recording history and understanding performance. Doing complete campaign analysis, not just Google Analytics. And complete campaign analysis for me is looking at contribution or cost per number mailed or emailed or called. So right through to below the line, and then running a full P&L for the channel. So hopefully you've all got that financial discipline in place. And if you don't, please do. Then outside of those reports, this is again a bit of a recap because I've talked about this many times before, but some additional analysis to drive growth for your business includes this recency frequency monetary analysis, which allows you to look at quadrants, high actives, medium and low actives. And you can do that across your entire database, but you can also do it within a product, you know, a product category. I think it's useful to look at who are my one case buyers and who are my really high actives. But let's say you had a new release of your Cabernet and your reserve Cabernet, and you wanted to go out to everyone in the past who's bought that product, you will find within that group high, medium and low actives. And you might want to target the offer differently or the subject line or something differently to each of those groups. So it's a drill down to product data, but then a drill down to RFM within that product data. I hope that makes sense. But you might, if you've got someone that bought the Cabernet 4 years ago but hasn't bought since, you might have a different offer or a different subject line to that cluster of customers than you do your high actives who bought Cabernet earlier in the year. So it's just being smart and precise, I guess, and personalized around, you know, right product, right person, right place with the right level of activity. So I'm just really passionate about that one. And I know that for every one of you on this call, there will be value in doing this exercise in your database. So these are questions for you to ask yourself today, just as you're sitting there. How are you leveraging the data in your channel? How are you upskilling team members to utilize the data? And do you have the right team members to utilize the data? Because it is a bit of an analytical mindset and not everyone is an analyst. And I think that's a challenge for you guys because you have awesome hospitality people. And then we try to ask them to be an analyst at the same time. But they're very different. If you did a Myers-Briggs, totally different personality types. So you can't be a jack of all trades in this space. It's very tricky. So how are you upskilling team members and how are you attracting the right talent around those skills? You know, definitely questions just to, you know, discuss at the management level. So moving into some strategies for success in 25, 26, and I've gleaned these across, a couple of wineries in the US and, things that I'm seeing out in the market. None of them are earth-shattering, so don't get too excited. But, I guess it's about you thinking about whether you're activating these things in your business. There's this big idea of unified data. I think this has been going on for 20 years in the single brand model. This patchy data across, there's the D2C channel, but then there's little channels within the D2C channel. So there's the cellar door, there's email, there's outbound, there's club. But this idea of unified data, customer is king. Customer control is something separate I'll talk about in a minute. But this idea of unified data is just so important. The cellar door data needs to be able to speak to your wine club and vice versa, so that whoever is looking up a customer, particularly your hospitality teams, has the full bottle. They can see when the customer was last with you, what they bought, what their problems were, what they liked. The more they have at their disposal, the better that experience is, the better the personal experience is, and the higher certainly the higher the customer service level and the higher conversion rate. So this idea of unified data, and I would just challenge you to think about where your data is sitting and where there's kind of little breakages between those points, remembering that customer is king and they should be sitting at the very top with all of those channels underneath, with visibility for both the D2C operator behind the scenes, but also your hospitality staff. And you need to find a way to get there if you want to be best in class. So this idea of unified data for seamless hospitality and seamless kind of customer conversations is a big one. Then there's this idea of customer control, and this is a big one in the US, which is interesting. It's not that surprising, but this idea of a modern club experience that prioritizes flexibility and user choice rather than obligation. And I know a lot of the platforms are right onto this, which is fab, and most of you are too, in terms of providing choice, allowing people sort of flexibility and to choose. There's space for both, I will say. There's space for the fixed option for people that can't be bothered with that, but there is also space for giving full control to the consumer. And that goes right through to skipping and cancelling. I think in the days gone by, we've been nervous to give full control to the consumer, but at the end of the day, that builds trust, which impacts lifetime value. So this idea of customer control, and if I was sitting in your shoes listening to this, I'd just be asking myself, what level of control does my customer have in terms of what they can and can't do within, the buying channels? So the last one here is data visibility, and the ability to identify high value members instantly. And I've talked about that in terms of RFM. So it's a little bit different to unified data. Unified data is how your systems are strung together. And then data visibility is really your ability to identify very quickly your high value customers. You should be able to slice and dice that data these days on the spot. So ask yourself those questions. I've talked about this. It's just a bit of an expansion on this trust through customer control. So I'm not going to talk through that. You can have a read of that if you listen to this again on the recording. But the other part of the control piece, which builds trust, is that it also removes friction and anxiety associated with long-term commitments. So it's all round a good thing. And I know that wineries that have flipped into this space in the US have seen impressive results in terms of retention and acquisition, because it just makes it an easier sell. So there are a couple of strategic ideas for you to think about. And then I wanted to move into a more operational space, which is sort of tactical, I guess, that are driving success in 25, 26. The old chestnut, the wine club, I think everyone knows that. There's continued focus on wine club is just really important. They are more loyal and they have a higher lifetime value. We saw that earlier, higher average order value, but higher lifetime value. They are your best customers. So we really need to drive that as hard as we can. I mean, I have to say I'm still going into cellar doors and still working with wineries where this is not optimized. And I go in just as an average punter, and no one offers me, no one asks for my information, and no one offers me a wine club. It's all very, very hidden, can I say? But this is crazy, because especially if we're in an environment of decreasing foot traffic, you know, the club and the list becomes your demand engine. So there is just no reason not to be really focusing on the conversion and the sale and the technique and the staff training in that space. So I so encourage that. And then just this idea of free shipping and perks. You know, free shipping, it's a margin hit, but I think it's becoming, particularly given, you know, the price of wine on a case, I think it's almost a no-brainer. We need to find a way to build that into the margin, free freight, because I think it should almost be a standard. You know, people expect free freight when they're spending over $200 or $300. So, and then the idea of no haggle returns has become a standard, and I presume you're all doing that anyway, but we just have to accept that that's a customer service element. If someone's not happy, refund it, because if you don't, they'll go and tell 10 people about their bad experience. So yeah, ask for the order. Do not be afraid to ask for the order, and do not be afraid to make a warm invitation to every person for your wine club. You know, and this goes back to the customer journey and the scripting and the sales techniques. But if that's not something that you're talking about in your weekly meetings, or that you're not sort of building into your hospitality training, I would suggest that you consider that. It's a must-do. Likewise, capturing data, and I've touched on this. It's not administrative, it is your demand engine. It's my new word for the week. But it does give you control. You can't control who's walking in as easily, but you can control what you do with them when they come into the cellar door. So please, please capture everybody's data. I also just wanted to touch on email execution. Email is still proving to be really valuable. And I think, again, just trying to get you to focus in on how you're running your email program. This slide is really about direct marketing copy 101. And I would suggest that you maybe do an audit of your last 5 emails and just check back against these bullet points and ask yourself if you're ticking these boxes. But subject lines need to be clear, not necessarily clever, but they need to be clear. They need to make a specific promise. They need to feel human, you know, words like you, your, and they obviously need to match the content inside. But subject lines, I've talked about this many times before, but they're very important. One main job per email. You know, I still talk to clients who are have a screed of things that they're doing in an email. They might be publicizing an event, they might be doing a bit of history, they might be having a chat, they might have an offer in there. One main job per email. I mean, people are so time poor. You know, and I've read something, you know, I think even our email browsers are now wrapping up the subject of the email into like one sentence, which I love. But if it's not of interest, it's gone. So think about that when you're creating your copy. One main job per email. And then my last point, respect the skim. You know, you've got to make it super clean and clear. Most people are reading emails on their mobile, and you help people by keeping it short, using descriptive subheads, so bolded subheads and highlights, highlighting key phrases. This has been done forever in direct marketing in mail. So it's just adopting those techniques into your email copy. Do the audit. I think it's worthwhile doing. Update your templates and plan a mini series. So 3 emails with one job beats one long mixed purpose email every time. So don't try it. I know it's more work. So that's the challenge for you guys. I get that. But it just loses all of the cut through if you're trying to do everything in the job and in the one email. And I think you lose people. I think you'll see an increase in click-through and response rate. So looking forward, these are really just reminders. So a bit of recapping again. Subscription wine club model remains seriously valuable. The numbers demonstrate these customers are more loyal, lifetime value is up, they spend more, they stay on for longer. So they're more valuable than any other customer type. So please, please drive those numbers through your cellar door, through that funnel. Do watch for changes by generation, coupled with increasing attrition rates, but don't be super alarmed. This is why I want you to model the size of the opportunity, because there's a natural curve of acquisition and attrition that is very benchmarked across all of the developed wine markets that are in the D2C space in the New World countries. And there are, you just need to educate yourself on what those are. And if you want to chat to me about it, give me a call. I do think more work needs to be done on understanding the lifetime value of a non-subscription wine club member, aka these loyalty programs. I'm not convinced, because you have to go out and make the sale every time to those customers. I'm not convinced that their lifetime value will be as high. I would be super happy to be proven wrong, but there's not enough data on that yet. And as I've said already 5 times, continue driving foot traffic and then converting through to list and club. Hone your techniques at the cellar door. Manage your communication plans to optimize all of your channel opportunities. I haven't talked about outbound telemarketing today. Interestingly, that was not in the Commerce 7 data. I'm a big advocate for outbound telemarketing. It's the most personal way to engage your customers. I always encourage people to bring that in-house to the extent that they can, because it's a margin play and probably a better relationship. And the other part that was not in that data is that is actually the highest average order value is through outbound telemarketing. And that was in the analytics data that they publish annually. I just haven't seen an updated report from them yet. So activate all channels. And then the last point there, wineries who are investing in the channel, primarily technology, analytics and resourcing, are seeing improved results. So again, just do a little bit of a business audit and ask yourselves whether you're investing in those spaces. And then final thoughts and priorities before, I think we've hopefully got a bit of time for Q&A, these actually closed out the D2C for those of you that were at the direct-to-consumer event at the end of last year. Just my five key areas, if you were to take away 5 things. Invest in the right resources, because people really are everything. Without the right people in the right seat with the right mindset and the right skills, it's very hard to execute in this channel. It's a complex channel requiring numerous skill sets. So right resources. Model the size of your opportunity. Know where you're at in the cycle. And this is easily done with some basic metrics: traffic, percentage conversion to list, percentage conversion to club, measuring your attrition monthly, modeling it out over a 15-year period. So annualizing those numbers and then rolling it forward. It's eye-opening and it's quite straightforward. Ensure your data is connected. We talked a lot about that earlier on. One view of the customer. So if you've got pinch points in terms of being able to see what's going on in any of the little sub D2C channels, connect those dots. It'll make your life easier in terms of seeing exactly what the consumer's doing. Know your numbers and your growth drivers. And those growth drivers really are traffic, conversion, attrition, average order value, and response rate and offer margins and lifetime values. And then moving into RFM. If you had all of those pieces, you'd actually be pretty well positioned to extract as much value as you could from your list. And then lastly, use your transactional data, because ultimately that means you're being customer led. The customers are telling you what they're doing. It's all there in your database. So use it. And that closes out my quick chat for today. I hope there was some value in there for some of you. Feel free to give me a call or send me an email if there's any questions. And then I'll hand it back to you,
Georgia.
Alex, I guess, for Q&A.
Yes, fantastic. It was a great presentation and very thorough. And I think it covered a lot of really important areas of D2C and some key trends that we all need to be aware of. So we do have some questions, Georgia. So we might start off with something that's just more of a clarification point from Sarah. So at the beginning of the presentation, you had quite a few stats around and the question around is, are the D2C percentage volume or value? I think it was in relation to the first few slides, Sarah, I think.
Yeah, it's a good question. I
Yeah.
thought that too, and I double checked. It's value.
Value. All right, cool. Done. Tick. We got the first one off. First one done, Georgia.
Question, Sarah, because they're a little bit bland, the slides, in terms of what was on there. But yes, value, dollars.
No problems. All right. So our next question is from Kate. So it's around discounting. So you mentioned that there's discounts are necessary for customer retention. But what do you think of the concept of a discount trap? So if we offer discounts too frequently or extremely high discounts, will that turn customers off from purchasing at any other time and prevent them from wanting to pay full price? Or could it cause wineries, to officially inflate prices so they can offer a discount to keep up with competitors? What are your
Yeah.
thoughts on that?
Yeah, look, it's a good question. And, I always think about Country Road when I think about the discount trap and their,
Right.
whatever it is, what's their program? Spend and save, because that is the discount trap. Why would I buy it now when I know I can wait for 4 weeks and get my 30% off or whatever it might be? Not that I buy from Country Road anymore. I think they've gone off Country Road. Um, personal opinion.
Dolce and Gabbana only, right, Georgia?
That's right. Yes. They need a new designer. But, I do think discounting does play a part, and it obviously plays a part in the wine club, and
Yes,
there's a lot of conversation that goes on when developing the wine club about the appropriate level of discount. And I
sure.
think that's fine because you've got this commitment and that's not a trap. I think maybe what Kate is referring to is through email and through other channels.
Yeah.
Might be right. And I think you need to be careful of discounting your product, particularly, depending on how much you have of it. There's just so much that goes into should I discount or not? Do I need to discount or not? Would I be better to value add or not? Can I build in free shipping? Because that is essentially a discount, but it's not affecting the product price.
Yes.
I don't think I can give Kate a single answer, but I would agree that you do not want to get into the habit of every email going out with a 20% discount because it's meaningless over time. Definitely.
Absolutely. Yeah. And look, I've seen it work with some wine brands where if you're a certain level of customer, right, in terms of what you're spending annually, then you get, discounts on certain products, right? Or I think it also works. Let's say if someone's buying a case of your flagship product, right, then you have like a special offer for any other additional, packs or, cases that they buy. I think that's a better way to do it.
Yes.
A flat discount across everything.
I totally agree. I think the flat discount doesn't really work. And I was also going to add to that, Alex, and say, this is why I like the RFM, the recency, frequency, monetary, so much, because you can then employ these different tactics, pricing tactics for different quadrants. So let's say you have a really high active group of Cabernet buyers that are collecting Cabernet, or they continually buy. Well, you're not going to heavily discount to that group. But if you have a group in the bottom right-hand quadrant who hasn't bought for 3 years, you may apply a discount to that subset of Cabernet drinkers to get them purchasing again. So the motivation for the conversion is different and it is targeted. It's not blanket. So, it requires, it's nitty-gritty. You've got to get your hands dirty, and I appreciate it feels sort of fiddly, but this idea of personalized marketing to different groups with different pricing structures, it works. It works because your job is to increase the overall conversion. I was going to say something else with the discounting. Certainly RFM. Oh, it's just gone, so I won't waste time if it comes back on.
That's all right, no problems. The next point from Sam was I think it's more of a point of clarification. So you had the slide where it's the club sign-up percentage. So the question is, how is the sign-up metric calculated? Is it a percentage of transactions?
Sign up to Wine Club?
I think it was Sam's written club sign-up percentage.
Yeah. So, I mean, look, the measure for club sign-up is conversion to foot traffic. That's the only way you can measure it. So how many people are coming through my door and how many conversions am I making as a percentage of foot traffic? That is the right stat. As it relates to that slide, it was actually raw numbers. um, in terms of looking at February, looking at all of their, remember that was benchmark data, and looking at all of their customers who had been on board for more than 2 years and tracking by month how many people were signing up. So it was a raw number. Again, not super useful. You can only look at the percentages, but it gives you a pattern. It's useful in terms of benchmarking the pattern, but the measure has to be your foot traffic and your conversion percentage and tracking that.
All right, great. All right, our next question is an anonymous question. Oh, I love a good anonymous question. So the question is, I'm assessing my tech provider at the moment. I'm finding the ones, one of them that has been mentioned today isn't, I'm changing their words, it isn't what I need. I'm wondering if you have any preferences, and if so, why?
Look, I have always maintained that I am agnostic with system platforms because I think they will all do the job. Now it depends on preferences in certain areas. I think some are really good with small wineries. I think, some are better with commercial propositions that have other things going on outside of just D2C. And I can't remember who I mentioned today, but look, I think my comment there is that I think all of the platforms are doing a really good job in terms of getting to the nub of what wineries need, all of the ones that are in play. And I'm loving that they are getting finally into the data analytics, because that's the story that wineries need. And most of them have a pathway to give you a really great dashboard. And to provide the benchmark stats, and to also educate you on what you should be looking at in terms of your growth levers. So look, that's probably not the answer that Anon wanted, but
and look, and I find also when a wine business is in that type of situation where they've adopted a new tech, right, and it's just not working for them, I always find it's a good idea just to stop, stop and bring the team together, right, and really just map out like what are our needs to create a really good customer experience, right? And then put like a list of like, there could be nitty gritty needs. It could be all really high level needs into how you run the business, and then reassess like the current platform and if it can do that, right? Or look at other options. And look, and I think I've worked with almost all of the platforms that are on offer in the wine industry. And often if you come back to them with, oh, this is what I really needed to do and it's not doing it, like a lot of them do come to the party.
If they see value in it for their other clients, absolutely, it'll go on the list of things.
They always want to turn you into a testimonial, right?
So I think that's a good point, Alex. And, I do think most of the systems will do, for our model, which is Wine Club and email and website. Most of them will do that. I will say it's just so difficult. So it's kind of like it's only as good as the scope. So how thorough and deep was your scope, and how did you work through that with the potential provider? And the other thing is that it's always hard work. There's no silver bullet. And I go way back to sort of SAP or Oracle back in the day, transition into, remember that?
Dark days.
They were dark days. And we went through a whole scoping exercise with Oracle for Selena and didn't do it. But it's hard. It's hard, and there's no perfect, there's no silver bullet. So I think you have to work through it. But the key is working out what your main objectives are and making sure it ticks those boxes.
Yeah, exactly. And look, all systems are all guilty of saying, look, this system will literally solve all your personal and professional issues, right? But then and when you do implement something, it's sometimes when it's not exactly what you want, you just have to pause and figure out exactly what you do want.
And look, it's the challenge of off-the-shelf solutions, isn't it? When you don't have an in-house IT department, that you can just throw something to and say, oh, we'll fix this, but the beauty of it is that they're all fairly cost effective, and they're pushing things forward. I think it's good. I think it's good.
All right, great. Next question is from Marcus. So I found that you start losing customers when your offer is always the same. once you broaden the product choice or portfolio, you become more attractive again and can win customers back. Have you come across any D2C collaborations between wineries where the portfolios complement each other and add value rather than compete?
That's interesting. And I wonder if Marcus means within a brand or within a corporation.
Well, the focus is around D2C
For
collaboration, right? So with, I think within a winery, right? And then I guess it could be anything, whether it's like a classic one is like with a glass company, right? Or
Okay.
collaborations. It could potentially be collaborations with a celebrity or influencer or even like a car brand, I guess. Yeah.
Oh, okay. So I'd have to get Marcus to clarify that that's what he means, because I would have interpreted it being around, wine, sort of, to sort of extend the lifetime value. But why don't I answer both? So as it relates to partnerships, it's essentially partnership marketing. And I think there is some value there from an acquisition side of things, definitely, just because it allows you to tap new markets outside of the cellar door, if it's partnerships, collabs, etc. If it's within the wine space, I think that's more interesting, because I'm interested in how consumers kind of behave around their wine consumption and brands. And if I can just go back to an example we used in the US, this is now many years ago, but we recognized this lifetime of a customer was around 3 years and the churn rate was starting to kick in. And we developed, we're in the position, this is with Beringer Blass Wine Estates, and they had 20 labels, 20 brands, individual brands, and we developed something on the side called World Wine Estates. And that allowed us to transition people cancelling out of the single brand model into something that gave them more choice and flexibility. And we know that's how consumers drink and buy their wine. They don't just buy one brand. So what I'm interested in for, and this is very open, broad conversation, but is for regions, for example, and I know I've sort of talked about this with a couple of the regions, is for small wineries, particularly that can't get the cut through or reach critical mass on their direct consumer program. Perhaps they pool resources and collaborate with as a multi-brand proposition in a sub-region or something, to, I guess, build that program, because the cost base is lower, but you're also giving customers, choice and flexibility, which we know is something that they want. Now, I know as a single brand, it's controversial because people go, well, hang on, we're brand marketers and we're at the winery, but it depends who, it just depends how much you want the growth. For me, I would want my brand in as many mouths as possible. And that is another strategy and a way of doing it. It hasn't been implemented yet. I think there's an opportunity there. I hope that answers Marcus's question. But
okay, great. All right, we might move on to our next question from Lauren. So the question is, you spoke about having the right internal capability rather than asking a great cellar door manager to become a data analyst, but you also said outbound telemarketing works best in-house. If you had to resource one, which one would you?
yeah, good question,
Which
Lauren.
one? Sorry. Sorry, Lauren.
I would do both. But do you know what? If I was pragmatic about it, I would be monetizing both. I would go, okay, if I had a data analyst and my database is X, Y, and Z, and I could slice and dice and drive a really fleshed out email program.
Yeah.
What would that generate for me versus that person being on the phone? I would have to just be commercial about it and run the numbers.
Yeah. And depending on how big you are, right? Like you could actually just get a data analyst in to start off with, right? And map out a bit of a strategy and then get them to check in maybe quarterly.
Yeah, absolutely.
You don't have to have a full-time data analyst.
You do not. And I've always thought that, Alex, it's such a good point, in that, just contract someone in and say, okay, I need a dashboard. I want you to set up an RFM that I can run monthly or quarterly. Really, you don't need it monthly. Quarterly is enough to monitor.
Because then you can see trends over a quarter, right?
Yeah. So get your data analyst in to sort of set everything up for you. And then, maybe bring them in biannually for a refresh, and you might think of some other things that you need. So maybe that's the way to do it, because one is this analyst, and then the other is selling. So different. which
Yeah,
no
and
one's
look, there are some really good
replicated.
AI tools that even if you as a business owner or a manager aren't great at
Mm,
analyzing the data, there's some good tools now. I know that we've
yeah,
used that can analyze the data on an ongoing basis.
yeah,
It gives you the right insight, right, to make the next decision. Whereas having
totally.
like that telemarketer there all the time, you can set them weekly, daily,
Yeah,
monthly KPIs, right,
yes,
to help drive your D2C business.
yes, yeah, definitely. And look, I think, Alex, the AI side of things is really interesting. It's not here yet, but
Mm.
I'm talking to my husband about generating for his business. Their financial modeling reports into AI. So getting the raw
Yeah.
data, putting it in, writing the command. I mean, I think that's not too far away. So I'm hoping that
Yes.
down the track, wineries can do it themselves. And it's really a question of being able to extract the data, just pull the data from the system, but then know what the right commands are. To ask, pop it into AI and say, I want this. These are my parameters for recency,
Yeah.
for monetary, and then do it self.
Yeah.
But it's a
And
good question around
there's
priority. But
yeah, there's some great Aussie AI tech being built where you can ring fence it into your organization. So when you're putting like confidential or proprietary data into that platform, it's not like it's being shared back into the large language models. So
yeah, yeah,
there's
yeah,
some great options. All right, so let's keep going. We've got lots of questions. So from Sarah, does inbound in the Commerce 7 numbers only include email, or
yeah,
are there other channels that
yeah.
go
No, it's just
email? Right,
email.
cool. Love it. All right, another anonymous question. I love good anonymous question. Any ideas for club recruitment without a cellar door?
The $1 million question. Um,
Yes.
there is no silver bullet for that, and it is a sum of the parts question, really. I think some people have a bit of success on digital, but not so much for Wine Club because it's a commitment sell and it's hard and it's a high price point. But I know some wineries that have got very targeted. They're small numbers, but they have had some success in that space. The partnership model, I think, is more challenging these days, but it is still one that I would explore. And when I say partnership model, it's going more back to sponsorship partnerships where the person you're partnering with has a large list. But look, I think that list marketing side of things is so challenging because everyone now understands the value of their list, and it's not what it used to be. So no, Anon, I don't have a silver bullet for you. It's hard. And that's what's going on in the US.
Yeah,
This
yeah.
program model at the winery level has kind of maxed out and they're really trying to hang on and extend lifetime value. They also haven't found the silver bullet. And I think people thought the web would be that channel. But it's hard to sell a big commitment online to
Yep,
a green audience. It's hard. It's
absolutely.
always a two-step, I would say. Get the leads in and then sell.
Absolutely. All right, I think we'll finish on one more question. So Rico, what is the current benchmark wine club conversion rate in Australia?
Yeah, that's a good question. Uh, my honest answer would be right now, I don't know. I know in the US it is sitting at around 6%.
Right.
You had always said that, you should be between 3 and 5%. I think they are pushing it harder because they've realized less foot traffic.
Mhm.
Got to focus more on the conversion. So that is something that the US is seeing. And I think that's stabilizing some of their numbers. We
Okay.
wanted to say focus on that, on the wine club conversion. But look, certainly some people are getting more than 6, but I think 6 is a great number to aim for. 6% of unique foot traffic.
All right, fantastic. All right, well, thank you for your insights today, and
No
thank you
worries.
to everyone who attended and all your great questions. Look, also a reminder for WCA members, all recordings from previous webinars are held on our website under the education section for members only. And if you aren't a member yet, please join us, and you can attend all the webinars for free. And it's membership just starts at $190 per year, and it's a great network to be part of, and it's a very welcoming network. So I encourage you to attend all our webinars, but also come to some of our events. I also wanted to flag, Georgia presents at our D2C Wine Summit, which is every November in Sydney. And also wanted to flag we've got our Wine Growth Summit coming up in Adelaide on the 25th of June. So you've got to focus both on export for Wine Growth Summit and the D2C space for the direct-to-consumer summit. Look, if you've got any suggestions or on webinar topics that you'd like us to cover, we're always here to hear from members about what they want us to talk about. Please email the team at wca@winecommunicators.com.au or just reply to one of our reminder emails that we would have sent you today. Look, thank you again, Georgia, for your time, providing your expertise. It's been an absolute pleasure hosting today, and I hope everyone enjoys the rest of the day.
Right. Thanks, Alex. Bye.
Thank you.